and welcome back to Dukascopy TV. Now, if you enjoy the technical side of trading, well, we've got something just for you here today. Joining me in the studio is independent market strategist Bruno Estier. Bruno,
hello, Thomas.
Thank you for coming in. Now, you've come to the studio armed with a plethora of colourful graphs. I can say right now that I'm not an expert in the technical side of trading in the markets, but let's just start with the last interview we did, which was last week, looking at the small and mid caps, wasn't it? The small and mid cap index. Just talk us through, just off the back of that, what we're seeing at the moment moving into this week, if you could.
Sure. What we had last time, the main message was these indices were making new highs. On the top part we have the small cap index, Russell 2000. On the lower part we have the mid cap index.
So the lower cap is down here, and the upper is right at the top, the small cap at the top.
Right,
yeah.
and both are making new highs recently in July. Mm-hmm. And also we noticed down there that the lines are pointing up. That means the momentum, the speed of the price movement is moving up. And this is not only restricted to these two indices. If we go further to the Nasdaq Composite Index, which includes especially well-performing financial stocks, but also technology, they are making just now one new highs on the Nasdaq Composite Index. The only one which is just about to make a new high is the very wide New York Stock Exchange Composite Index. For one good reason, it is lagging because it includes also foreign stocks and as well interest rate sensitive issues which had been negatively impacted by the rise of 10-year US yield in the last months, from 1.5 to 2.5. So these bullish pictures, of course, correspond as well with the perception that there is no risk in the market. Where do we measure risk in the market? Usually we use the VIX index. And as we have been looking through different interviews in the past, this VIX index has moved from the magic 20 level, which is the red lines here, down all the way to about 13%. If we look a little bit more in detail, we notice even though that it has broken a blue rising line, something which was joining the previous lows. For technical analysts, it is important because it means it could eventually continue to go down.
Okay. Why are we seeing that? Why are we seeing that decline, though, Bruno?
We'll see that decline because that means that people who want to buy protection in case of the market would correct, move down, are not doing it. By not doing it, they are not bidding up the price of the volatility, which is the price which goes into the price of put options.
I see.
And the fact that we are very low is indeed very nice, but also a warning. When you are too low, as you notice here, we are around 12.25, and it is very close to the levels in May when we had the top of the market, as you can see here, and also in April or March when we really had top of the market, we had bottoms in VIX. So basically, short-term traders are looking at that instrument eventually to see when it will turn. Okay. And it could last, because the market is relatively illiquid and quiet and everybody is on the beach, quite a few days.
So that's VIX. What have we got next? What have you got next for us here?
Well, the other thing that we've got is basically the S&P 500. What we noticed here from April to now July, is after the correction in May, June, we had really an ascent recently in July into these days.
You can see that really is quite an ascent, isn't it?
This is quite an ascent, and also if you look at the price action here, it is about the same speed as the one which is on your side during May. So there is a sense that it could continue, but there is also some uncertainty in the fact that the steepness of the rise is probably a bit too fast, and so anytime some kind of correction is overdue.
I see, okay. Now, we've got, that's the S&P 500. We've got a few more graphs, I think.
We got two more graphs because the main market is basically the S&P 500, mm-hmm. which is leading all the others. Mm-hmm. The next chart is the second best performing market so far, which is the Nikkei. Mm-hmm. But the Nikkei has not been overperforming the US market in the last 3 weeks.
Why is that?
just because probably we are reaching the top of the range. You see that after hitting about 16,000 in May, there was a sharp decline, and it moved down into June to 12,600, a level that we mentioned in a previous interview. And now we are back to about 60–70% retracement of the move down, close to an important level, which is between 15,200 and 14,700. You see also something which is typical technical on the oscillator down there, which is not a new high while the price was making a new high. That's what we call a divergence. So it could announce at least a sideways pose for a little while. And we see that also somehow in the Euro stocks, but less pronounced because there is no divergence here on the same indicator that we have here. It's still up. How far up it can go, it has been underperforming the S&P 500. This is still an open question. So basically the final question is, could there be a rotation where there would be a pause in the Nikkei, a pause in the S&P, and European stocks would catch up? But that's usually...
And your answer to that? What will be
my answer to that is you have to wait, because it has not been seen so far in the market, and I trust first the trend before any reversal or any new thing.
Okay, Bruno.
So I keep with the US market.
Bruno, thanks once again for coming into the studio. I learn something every day, especially from technical analysts, so thank you again for coming in.
You're welcome.
That's all we've got time for at the moment on Dukascopy TV. Of course, Bruno will be back with us in the coming days to give us the latest updates on his technical analysis. But that's all for now. We'll see you again very shortly. Goodbye.